Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese. Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors. Hey everybody, Ryan here. Boy, do we have an amazing Facts versus Feelings this week. If you're looking at the YouTube channel, you can see I have my very special Dan Ives shirt. Funny little story about these. We ordered these because we just interviewed Dan live last week from Partner Summit Omaha with all of our great Carson partners. It was pretty much a standing room only room. You know, there was a lot of excitement. Dan just brought the A game like he always does. We ordered these shirts, which are Hawaiian shirts with Dan's faces. I ordered them like 3 weeks ago. They came from China. They didn't make it in time. So Sonu and I went to plan B because, you know, Dan brought his A game with how he was going to dress. So we had to do the same. But I figured, well, we'll do a quick little intro to this week's Facts versus Feelings. Again, live from Omaha with Dan Ives, Managing Director over at Wedbush. Sonu and I had a blast. We've had a lot of positive feedback from the people that got to see it live in Omaha. And with all of that, I'm just going to be quiet. And we are going to take it back a week with Sonu, myself, and Dan Ives from Omaha. Here is the latest Facts versus Feelings. Take it away.
All right, we're going to start episode 137, Carson's Facts versus Feelings, live. Sonu, as always, and none other than Mr. Dan Ives. Dan, welcome to Omaha.
Welcome, Dan.
Thank you. Great to be here.
What'd you do this afternoon? Listen to this. He's getting into it. What'd you do this afternoon?
I mean, I was at the Big Ten baseball tournament. So I'm a big Big Ten fan. Penn State, for anyone there, we are.
Yeah, there you
All
go.
right.
So yeah, just so people know on this podcast, when you listen to it, we recorded this the previous week. We are live from Omaha at our Partner Summit with all of our partners from all over the United States. With Dan Ives, he flew in today to join us on day 2 of Partner Summit. Sonu, I forgot the title.
I think we need Dan's title.
Yeah, well, what's the title? Let me make sure I read this correctly. This is The Future of Technology, AI, and Innovation with Dan Ives. Dan, we like
it. Sounds so much more formal.
It's so much more formal.
I feel like now we can start.
And now we can start.
Yes.
Dan, what exactly is your title, and what do you do all day? Because I saw you on TV just a couple hours ago. Are you cloned? It feels like there's a bunch of Dan Ives out there.
It's AI.
Yeah, there you go.
Exactly. Yeah. So look, I mean, at Wedbush, global head of tech research. But look, really, I mean, about 25 years covering tech stocks on Wall Street. And look, it speaks to, for anyone that's followed my stuff, it's like we've always been passionate about finding the disruptive technology themes and ultimately the winners and how to play those, right? And I think that's sort of been how we've built it. Obviously, a big focus of ours the last 3 years has been AI. I continue to believe it's the fourth industrial revolution. And and we spend so much of our time, but also so much of our time traveling, right? I mean, 3.5 million air miles the last 20 years, 25 years. It's like, that to me is also like what separates the ability to understand. Because when you see it on the ground, when you're in Taiwan, when you're in China, when you meet with investors around the world, you have a much different view than sometimes sitting, in the 15th floor of a New York City office building wearing Peter Millar.
I want to pick up on that China thing, but a more serious question first. When did the outfit thing start up?
I mean, the outfit thing. So, look.
Has it always been?
And I've like talked about it like with some places. It's like I always dressed funky growing up as a kid in Long Island. For any 516s out there.
Okay.
And
got some fans.
And then look, when I started to do this job, like maybe I'd wear like a pink, going back like 98, like a pink tie. And then I'd slowly just continue to sort of get further and further. And look, realistically, like I dress kind of the way that I pick stocks. Like it's unconventional. I'm always going to go to the beat of a different drum. And also I like when I dress, I'm comfortable, and it's how I sort of have always sort of gone about this business. But the dress stuff has clearly turned into something that was.
Oh yeah.
But actually that was like never my intention. It just turned it, and then like New York Post and a bunch of different articles about it, and then it kind of morphs. Like when I get to my office every week, I probably get like 10, 12 boxes of clothes, shirts, hats, like random stuff. So maybe I'll be getting those sunglasses.
We're doing this right.
I want that
no
too.
one sends us clothes. Yeah. Let me jump in. We'll just start. I love the idea of stocks, right? So again, this is not a recommendation from the Carson point of view, but you were on Bloomberg just a couple hours ago from the airport, and you've got a $600 target on Tesla. Tell us a little bit about why.
Well, yeah, and our target's 350, and
why did I see 600? What did I mix up, Dan?
No, because our bull case is
bull
what I
case.
view
All right.
a $2 trillion valuation on Tesla.
And that'd be about 600.
Look, Tesla, we've never viewed it as a car company. We view it as a disruptive technology player. And my view, and it's why we were so adamant about like with Musk and Doge and I think some of the brand damage and everything we saw, that he needed to basically stop that chapter, because to me, autonomous robotics, I mean, that's going to be, when it comes to physical AI, that's going to be one of the biggest use cases when it comes to AI. And the two biggest players for that are NVIDIA and Tesla. And that's why when I look at Tesla, I believe the autonomous and robotics future, that will be a biggest part of the valuation, will be that rather than like the traditional car company. And I think but that's another example, like many that have always viewed Tesla as a car company, and it's probably the most emotional like bull bear story I've ever covered, they've hated it the whole time. And getting to know Elon and Tesla going back many, many years ago, I'm just a big believer that you cannot just focus on a PE over the next year. You can't just focus on what a company is doing over the next 6 to 9 months. You have to be able to understand the vision. That's really how we got today in terms of electric vehicles and what I view as really the future in terms of autonomous and robotics, which is why I view Tesla as one of the best AI plays out there.
Is Elon done with Doge? And how important is that for Tesla?
Well, look, I think that earnings call was a pivotal earnings call because it was basically more and more pressure, and we've talked about it, that he basically needed to pick Tesla or Trump and Doge. There was no way that this could go on. And look, there's definitely going to be like some brand damage. We've talked about is 5% of it permanent or 7% or 10%. But he needed to stop that chapter. And in our view, it's the end, more or less, of his time in the Trump White House. But really focus on autonomous and robotics and driving AI. I mean, Austin, is where AI starts in terms of the autonomous in June. So I think it was just very important because I continue to think the biggest asset of Tesla is Musk. So and that's why it was so important. It was what I view is probably going to be viewed like in years ahead, one of like the most pivotal calls that he's ever done.
I want to, while staying in Tesla, I want to bring you've been to China, and we just talked about that before, and should we, I'll ask it this way, should we let BYD and all these other Chinese EVs into this country? I'm not saying that will happen, but should we, or should we protect, say, Tesla, for example?
I mean, look, the reality is like that's almost step like 8. Right now, it's about like producing in China, right? I mean, when you think about tariffs, and look, the reality is that the U.S. tech infrastructure is in Asia, and it's in China, it's in Taiwan. And it's a fairy tale to think that we're gonna build iPhones here in the US. For someone like myself, I spent so much of my time, so much of my career in Asia, you walk out of Taiwan and China and be like, that can never happen here in the US, relative to just the cost structure, the scale, the infrastructure, and even the IP. So that's why when it came to like everything with the tariffs starting April 2nd, it sends such shivers down the spine of anyone that understands tech, because in my view, just going off topic a second, it was like, for the first time in 30 years, the US is ahead of China when it comes to tech. But the last thing you want to do is cut them off at the knees. I mean, NVIDIA's already lost half their China business to Huawei since the restriction. But then just going back to like BYD, look, eventually at one point, you'll have BYD here in the US, you'll have Chinese players, but also a lot of those
And
players.
I think their trucks or buses are already here.
Yeah, but most of the problem there is that a lot of that is government subsidized.
Right.
I wouldn't call them dumping, but like, you know, they're 20,000, you have 10,000, $15,000 EVs. And it speaks to almost counter to where we're trying to head, where you're just trying to have a competitive market where it's pure supply and demand.
Why couldn't Apple figure out how to put a smartphone on wheels, and Xiaomi and some of these, you know, phone companies in Asia do it? Or
But they've gone down that path, and I think Apple has stuck to its knitting. Now, some would argue like they should have done this, should have done that. Sure. But the reason they're the most valuable company in the world is because it was all about the install base. 2.4 billion iOS devices, 1.5 billion iPhones. And I just continue to believe like 70% of the world, they're going to access AI through an Apple device. Because they play a different game, Apple. It's all about the install base. Now, in terms of like robotics, the car, right, in terms of different areas that they've gone through, look, you could, you know, hindsight, you could say, obviously, like, should they have done this, should they have done that? But it's hard to argue with where they are today. AI, clearly they were behind, especially behind relative to other big tech players, and that's definitely been, you know, I think a frustrating thing for investors. But my view, and we'll be at WWDC in a few weeks, is like the consumer AI story will go through Apple. You're going to have in the next year like hundreds of apps that are built on Apple's infrastructure, and that think about them like a toll collector or a highway, like it's going to go through Apple on the consumer side, just like NVIDIA and the hyperscalers own the enterprise side.
So Dan, when you've been on with us before, we talked about the AI revolution and kind of what inning it was or what time it was. I love the analogy you used last time. You said it's like midnight, but it's an all-night rager.
Yeah.
What time?
I said 9 p.m.
9 p.m. Okay. Okay. 9 p.m. It's still an all-night rager. Well, we're all older. It felt like midnight, Dan. But what time frame? Let's say this party stops at 6 in the morning. There we go. What time is it for the AI rager? I
mean, we've continued to say it's like, look, and Trump shut the party down for a little with tariffs. Party's back open, velvet ropes around. I mean, so we view it as like, look, if you're thinking about it, it's like it's 10:30, and the party goes to 4 or 5 a.m. But my whole view is like many like value-centric or whatever haters or the bears, like they'll watch the party from the outside. It's raging. Jensen's on the dance floor, Carp, others, and they're like, it doesn't even look that fun in there. I'm just gonna go up to my room and read a book. So my point is, let's meet at the diner at 6 a.m. And see who had a better night. The Bears reading a book or the Bulls that had the, and that's just my.
But who's gonna have a worse next day? Yeah. I mean, I don't know.
But my view is like when it comes to tech, like if you, like the values centric, I've just never have gone down that path because like my view is like we're in a fourth industrial revolution. The growth is.
Just to Paul, what are the first three? What are the first three revolutions?
I mean, like, look, of course, like you go to like 1850s, 1920s, 1950s. Okay. I wouldn't consider what I'd say like the start of the internet really like a revolution. The reason this is a revolution is because everything in the internet that was built, if you think about all the fiber, all like .com, bubble, burst, now that capacity is actually being eaten up and being built through the AI revolution. Like I could argue in some ways that 95 to 2004 period laid the groundwork for where we are today from an infrastructure perspective. But my view is just you need to own the themes and the winners. And look, Palantir is a good example, right? Like they hate it at 10, despise it at 40, yelling from the mountaintops at 70, 120, and it continues. And I believe Palantir is going to be $1 trillion market cap because it's my view they're going to be one of the core leaders in terms of everything Carson built, in terms of on the enterprise, use cases, governments, sovereigns. And look, only 4% of US companies have gone down the AI path. 0 in Europe, 0 in Asia ex-China.
Sure.
So it speaks to where we are in this. That's why when you had the whole Middle East tour last week with Trump and all tech CEOs, and you're talking about like what's happened in UAE and Saudi Arabia, that's incremental. Like it's just showing where we're going. And there's only one chip in the world that's fueling it. It's Godfather of AI, Jensen NVIDIA.
How about, actually I'll ask it this way. What AI tools do you use and how do you use it?
Look, today, I mean, obviously Perplexity, ChatGPT, I mean, but from a consumer perspective, the models, this is like it's the first inning.
Yeah, sure.
So like a lot of people, I'm like, oh, I use ChatGPT, I don't use it as much now. That's not where it's going is like you're gonna have like hundreds of apps, AI. It's my view of like where robotics is going, autonomous. Like that's, to me, where it's heading. It's not about necessarily like the models, and that's the end all be all.
Or the chatbots, for example.
Because I view that as just like, it's all about the data. And that's why like in the enterprise, the reason like the hyperscalers and the software players are going to continue to own AI is because of the data.
Mm-hmm. What's Google's role here? I mean, how do you see Google fitting in? I mean, they just announced like some new tools with Gemini and look really exciting from my naive understanding and following the folks on Twitter who talk about this.
Their CEO was just on the All In podcast too. It was pretty interesting.
Yeah.
No, I mean, first of all, I'm not like we're bullish on Google, and I'm like not a believer, like to be like, oh, search is done, AI. I disagree. In other words, like queries are up, and Google is going to figure out, and that's what Sundar talked about yesterday, is like they're going to figure out monetization of AI on advertising as well as like what I'll call like the next form of search. But Google, a big part on the AI side is going to be on the cloud with like GCP. Because right now, if you look like this week, like Microsoft has Build, which is their developer conference. Google has I/O, which is their developer conference. Because what's happened now is like, there's almost like an arms race to try to get developers. It's like OpenAI's here, they're well ahead. So everyone's trying to get developed. That's what Apple's doing as well.
And Apple's like, in your view, the foundation everyone's going to build on top of.
On the consumer side.
The consumer side, right.
But on the enterprise side, that's why you look where like Microsoft is, Google, of course, OpenAI. It's my view like Palantir in terms of them building a lot more of the use cases. It's going to be names like Salesforce, Oracle. There's going to be a lot of companies over the next, and I think right now, like in software is like front and center in the AI revolution. And I think a lot of these names, whether it's an Oracle, a Salesforce, and I don't necessarily mean like Mongo and Snowflake and some like the AI names, but even like names like IBM. Like IBM, the stock doubled. Like it's because Arvind understands AI, and it's about monetization. It's about the stock getting more and more of a multiple. Because I just believe what's going to happen is some of the parts is how so many of these names are going to be valued. You're going to value them like, what's the AI component? What's the legacy? Like a sum of the parts.
So we've listed some big companies. Again, these aren't recommendations from the Carson point of view, but for our partners in the room, what are some small companies, maybe they've never heard of, that could be big winners down the line in the AI world?
I mean, because like when I think about like second, third, fourth derivative, that's about, I mean, there's names like Pegasystems, Tool Company that I think is a huge AI winner. SoundHound's another one that I've talked about. Obviously, Palantir is now discovered, and we've seen that. Innodata is another example. I think on cybersecurity, that's going to be a whole nother area that are going to benefit when it comes to AI. Names like, Varonis. I think, I believe names like CyberArk, which is obviously such a core name, but that's one like just in the middle of like reaching its sort of next stage of growth. Obviously CrowdStrike, Zscaler in terms of core AI names along with Palo Alto. But look, it's like, I believe like there's gonna be names like Oklo on nuclear. Like how are you gonna fuel data centers? Mm-hmm. See, that's the thing, like when you think about the AI theme, like in 2023 and 2024, like no matter where I went, I'm like, just own NVIDIA, you own Microsoft. That was it. Like that was the trade, or Mag 7.
Yeah, right.
But as it spreads because now it's like the use cases, who benefits there? Software. You need to protect it. Cybersecurity. The consumer piece, from Google to Meta to everything we're seeing, and I'd even argue like in China in terms of Baba and Baidu. And then there's going to be like, who's going to fuel the data centers on the energy side and on nuclear. So like when you think about the AI theme, it's not just about like Mag 7. Like it's about like,
it's more diffused.
But even like I saw today, like Warby Parker, they were doing like a bunch of AI stuff. Like, are they like an AI play? And also, you never want to be one where it's like, I always say like, if you focus on valuation, you've missed every transformational tech stock the last 20 years. Mm-hmm. Mm-hmm. And there's a lot, there's so many people, like smartest people in the room, they're sitting in the basement waiting for mom to bring the meatloaf down. Because bottom line is like, it's 5 o'clock, where's meatloaf? And they're like, the haters hate, whether it's social media or whatever. And it's just as someone that's covered tech stocks for 25 years, if you focus on valuation, and then we call them like the but crowd. You're like, well, stocks have rebounded on tariffs. Yeah, but, so there's always a caveat, and that's how I think if you get too caught up in like geopolitical 10-year Fed, that, you miss so many of the trends. And I think that's like one of our core lessons, like in our decades. Like some people be like, oh, Dan Ives so perma-bullish. It's kind of true because of my belief in the themes.
So we've hit
and the work we do.
Yeah.
Because it's like I always say, like the bears, when they're sitting in their caves in hibernation mode, they can't see AI in the spreadsheets.
Wow. We've hit about the halfway point. It's amazing how quickly this goes. I want to we'll just deviate a little bit. You're a huge Penn State fan. Went to Penn State. A couple Penn State fans in the room.
We are.
You are, I believe, seeing Penn State play tonight, right? Are they playing baseball?
They're playing now baseball.
They're playing baseball,
Okay.
but also, again, we don't want to go too into the sports, but is Franklin going to go over the hill this year finally?
Look, I mean,
I know we could talk for 2 hours on this.
We could talk. But look, I'm a huge passionate Penn State fan, huge passionate Big Ten fan. We go to all the games, and look, I believe like the Big Ten dominance is going to continue, right, in a post-NIL world. I mean, Michigan won it, Ohio State. I think Penn State wins at 25.
There you go.
That's my view. But it's going to be a great college football season.
I'm married into Ohio State families, and I feel like I can't get away from Ohio.
He talks to me all day, and his wife's an Ohio State fan.
Because you were.
I went to Purdue, but
Exactly.
it's also Big Ten.
Exactly.
But, coming back to China, you talking about haters. Is there too much hate towards China? And can we even we talk about decoupling? Can we decouple? Should we decouple?
You can't decouple. Now, if you want a Pinocchio fairy tale story, think you could decouple, build a fab here, let it take 4 to 5 years, have $400 sneakers instead of Vietnam and $3,500 iPhones, that's going to go well. Like if you want to live that's why I always say saying something.
You were talking about that last month.
No, I'm saying saying something behind a microphone in the Beltway is much different than until when you walk through a fab, seeing how things are actually produced. That's just the reality. That's why you had to have a scaling down of tariffs. U.S. needs China, China needs U.S. Just the reality of where it continues to head. So I'm just a believer, like the decoupling thesis, I view it as basically, it's a non-starter. Because ultimately, but look at it as an example with what's happened with NVIDIA. I mean, basically, by NVIDIA having restrictions with the H20 chip selling into China, you've essentially, like, if this is like NVIDIA's China bit, you're like Huawei here.
Sure.
No, I'm saying that's essentially what's happened. So it's very dangerous to go down that path. And I do think Trump administrations recognize that, and that's part of why we've seen the market rebound, because taking steps back, because if you believe in fairy tales, then you should believe in decoupling. If you believe in reality, U.S. needs China.
Speaking of someone who's been, like, I haven't been to China, but spent obviously a lot of time in India, and I grew up in the Middle East, but went to school there and all of that, but I have no sense of what technology in China is like. I've heard a lot of stories. I'm curious, how far behind, or are they behind at all in terms of general consumer tech, business tech?
No, they're behind
relative to the U.S.
They're behind because there's one chip fueling the AI revolution, and it's NVIDIA. I mean, let's just be clear. Like, that is the main reason why China is behind U.S. tech. And that's why, if you think about what's happened the last few weeks, China gets restricted on the H20, which is basically what I view as almost an older chip in terms of H100. You go to Middle East, in terms of UAE and Saudi, I mean, they're basically getting next-gen Blackwell chips. So, but it speaks to, like, NVIDIA is so important, as well as the hyperscalers in terms of Microsoft, Amazon, Google in this. And that's why, like, from a headline perspective, besides just like tariffs, when it comes like antitrust and everything else that's going on, it's a very fine balance, because be like, oh, big tech, they've gotten too big, but that's also like one of the biggest assets in our country. And if you actually try to not cut them off at the knees, but even like try to break them up or whatever, it makes them less powerful. And who's the winner? China tech. See, that's the whole issue here, is that you think you're doing something to make us stronger, but the reality is it actually makes China stronger.
Right.
And that was our whole argument, going back to like Liberation Day and in terms of where we were.
Do you think those tariffs come back? Because they said it's on pause, and like they're still talking about maybe the tariffs on chips come back and the consumer electronics and stuff like that? Or do you think we're done with that whole thing?
I think like there will be kind of like different scales in terms of where tariffs, but our view is that you basically get to a 10% baseline, you get to some sort of reciprocal 15% depending on the country. But I'm saying like that, and remember that was the view going into that April 2nd before the chart came out. So I think we get closer to that, but it's good. But as you get there, and Ryan and you guys have talked about it, it's like, look, there'll be like a lot of volatility, but that also creates the opportunity to own names. Sure. I mean, NVIDIA went to what, 83? Like, at the low.
Blake, we're going to bring up Blake Anderson from our team. He's a portfolio manager. He knows all this stuff. Blake, you've listened to a lot of this. I don't know where you are. Just yell out your question, and I'll repeat it.
I need to remove my glasses to see.
Yeah. Yell it out, Blake. Where is Blake? Oh, no, he's on the stage. There you are. Whoa, there's Blake. Give Blake a hand. There we go.
I appreciate it.
Yeah.
Dan, thanks so much for the time and for being here. Big fan of your work, and even bigger fan of your wardrobe.
Nice.
If we could double click on Microsoft. I've laid awake at night wondering why I don't own more Microsoft. It seems like they have everything. Maybe you could talk to why the stock's been in a bit of a funk recently, and what could break them out of it.
And let me just, so again, the mic picked it up for the podcast. Blake just asked Microsoft, everything about Microsoft.
It's a great question, because like he was asking about like, why is the stock not outperform more, and like what's holding it back? And look, and I do think if you go back, like, can Microsoft like first mover advantage, OpenAI, Nadella playing chess, others playing checkers, then all of a sudden like others get in the game, Amazon, Google, and I think then there's a view, like, okay, there's other ways to play AI, Microsoft's growth massively accelerated. Azure growth started to plateauish, so, what I would say relative to growth. But I think the street has massively mispriced Microsoft because it's my view in the enterprise backyard, they own it. I mean, they're only basically 8% through their customer base in terms of monetization. I think you saw this last quarter, because I think, especially institutionally, so many are playing it negatively. So you had the huge problem. But it's my view, like Microsoft's like a $550, $600 stock as it further plays out. But it's also a good example of like the psychology, right? Like everyone's like, there's abandoning of data centers from an anonymous source,
They're laying off 30,000 people, whatever it is, whatever the number is.
But whatever all the things are, it's very easy to like yell fire in a crowded theater when you're going through these situations. And I think Microsoft, to that point, is like very mispriced in terms of the opportunity on AI. Because like, look, we believe like, based on our research, for every $100 a customer spent with Microsoft in a lifetime, there's an incremental $40 to $50 that they could get just from AI. So that's almost like creating like another kind of mini Microsoft within Microsoft.
This week, you were playing golf somewhere. Tell us how cool you is. This guy's actually like a real, we went to, where did we go last October? Where did we go?
Golf.
Top Golf. We go to Top Golf. Everybody, all of a sudden, this guy's killing every ball. And then I realized he won a state championship in golf. It's like, wow. He should be on my team next time. How'd you do in Indianapolis this week?
Played pretty well, finished 6th out of 12. Thank you, Ryan.
He did good. That's high-level golf, though. So.
I appreciate it.
Yeah.
Nice.
Yep.
All
Thanks
right.
for the time, Dan.
Appreciate it, Blake.
Thanks, Blake.
Thank you. We've got about 10 minutes to go.
Actually, on that,
go
I'll
ahead.
continue on that Microsoft tangent.
I thought you were talking about golf. All right.
Or gold. No. Which of the Mag 7 do you think is most underestimated right now in terms of general story, not the price and things like that, but general story-wise?
I think Alphabet is the one right now where, like, I mean, Microsoft was, I think, for what, but that's had a bit of a come. I think Alphabet's the one, like, from like search is over because of AI, the antitrust worries. That's one where, like, and I feel like sentiment is so negative on it. To me, that's probably the one that's the most like unloved, mispriced relative to where we see it.
And you see the most, let's say, negative stories. Well, setting aside Tesla, but that's a different kind of hate, I suppose.
Yeah, but and also it's like, because you have, especially on the search is dead because of AI thesis, I think that's something that's like,
Right.
look, because then it's almost like a ghost, and you're trying to prove it that it's not there. And those are always tough. It takes time for stocks to recover as you go through that process.
No, of course, yeah. Go ahead.
So, Dan, the day we're doing this, Bitcoin's at an all-time high. Do you look much at Bitcoin, or is there any connection with Bitcoin hitting all-time highs, with AI, with technology? Just the fact that it hit an all-time high, and we've had Kathy Wood on many times. She's got an astronomical target. I don't know if you have a Bitcoin target, but what's your thoughts on that one?
I mean, my thoughts are, first of all, I think there's more and more companies that are going to go down this sell or MicroStrategy route where like pieces of their asset treasury they're going to use in terms of Bitcoin's going to become more and more of an asset class. I think we view Bitcoin also because like blockchain and a lot of the capabilities in terms of cloud and software and the innovation that's happening. And I think anyone that's like a hater dismisses it. I think in a deregulatory environment, then especially in the Trump administration, I mean, this is something that like I expect that you're going to continue to see that as a trend that goes higher. But also it's like, whether it's like risk on asset, whether it's like, in terms of like worries of the 10-year, does that almost help sometimes, like Bitcoin in terms of how does it correlate? I just continue to view it as more, it's a risk on asset. More and more investors don't probably have enough of it. And I think there's a limited supply.
Yeah, sure. So I know we probably got time for one more from you and one more from me.
I know you're excited about the AI story, but just honing in, what are you, if you had to pick one particular area, or even it could be a company too, what are you most excited about?
I mean, what we're most excited about is autonomous. And that relates especially to NVIDIA, of course to Tesla. You could argue even Waymo in terms of Alphabet, relative to where they're going. Because I think that, I believe if you're like an 8-year-old today, in theory, wouldn't need a driver's license when they turn 16 or 17. I mean, I'm saying that is my
kids are in
view.
Chicago. They're not. I'm not getting them.
Exactly. But that's my view in terms of what I think autonomous and robotics are the two most just innovative, exciting. Because it's our view, when robots are out, they're gonna go under 20,000.
Like the humanoid.
And you're gonna robots. When you look out over the next 5, 6, 7 years, it's gonna become more and more common. I'm also not one of these fear monger where they're AI, it's gonna ruin all of our jobs, it's gonna take everything away, we're gonna take it over by a robot. I mean, if you go back, I remember when I started covering tech stocks, even mid-90s, there was a view internet is gonna ruin jobs. It's good, and it actually created, probably one of the best assets in this country in terms of Silicon Valley and the overall tech infrastructure.
One idea I had, or question I had, let's say 5 years from now, what's kind of your most bombastic call but has a lot better chance of happening? Maybe we all have a robot that makes us a peanut butter and jelly sandwich if we ask for it. I mean, I don't know, but what's something that could happen in 5 years that we just don't see possible, but you do in your lens?
I mean, I think it's related to
peanut butter and jelly?
Peanut butter, exactly. No, I think it's related to autonomous and robot. I mean, especially when it comes to robotics, the innovation that I've seen, whether it's in the U.S. or abroad, it's almost like that acceleration is happening so quickly, and especially when you think about AI chips and how that's going to be implanted in terms of robots, not just the ability to how that could scale, but I think from a market perspective, it's my view, part of why we're going to be talking about NASDAQ 20, 25,000, 30,000, over the coming years, because the innovation is going to continue to be concentrated in tech. So I much would rather be in a left lane in a Ferrari going 110 miles an hour and maybe get a speeding ticket here and there or whatever, than be in a right lane owning value in a minivan, going 40 miles an hour with a broken radio and a bumper sticker saying my kid's an honor student in 3rd grade. So I'd rather be in the left lane and risk the ticket than be in the right lane and be oh, it doesn't even look that fun and be in the left lane. But these financials, they look really good. I mean, look, there's a guy covering financials that was next to me for 10 years in New York. I mean, that was, to me, I couldn't, the reason I get up every day and I'm passionate, it's about the technology and the growth. I'm not someone that's a book value type person. But again, it's I understand that, but for me, I'd rather own growth in tech.
Love it. So this was episode 137, Carson's Facts versus Feelings, live with Dan Ives from Partners Summit 2025. Dan, I'll let you have the final word. You see the clock. We've got 2 minutes to go. Any final bits of wisdom for the Carson partners in the room, for all the listeners on the Facts versus Feelings podcast?
First,
take it away.
It's great being here. And
honestly, we appreciate Dan flew in this morning. Give Dan a hand. He flew in this morning for this. Thank you, Dan. You're an awesome partner.
It's great being here, and you guys do an awesome job, your whole team, and Carson, just everything that you guys do. To me, it's just you got to use the volatility and the nervousness and the haters. You got to use that to your advantage to own these themes and these winners. I mean, me and you've talked about it a lot, over the years, but it's just too many times there's things that happen and it's not, you have the opportunities to own these transformational winners in these themes and you don't, because it's afraid whether it's geopolitical, whether it's technical, whether it's Fed, some Powell said in a speech or whatever it is. And I think sometimes like it's forest through the trees, right? It's like that to me is how you own the generational winners. And too many times in my career, whether it's institutional or on retail and doing so many of these things around the world, it's like it's very easy to just get caught up, especially in the social media, where those things kind of take on a life of its own, and you can, it's very easy to kind of talk yourself into certain negative themes.
That makes sense. You've got
Thank
a few
you.
more minutes after this, right? I know a bunch of people want pictures. Maybe somewhere if you want a picture, we'll do pictures somewhere, maybe this room or the outside there. But again, we're at the end. Listen, everybody, this was awesome. I learned a lot. I hope you learned a lot. Sonu and I are huge fans of Dan. Dan, thank you as always,
Thank you,
man, for coming. Enjoy the baseball games tonight, and thank you, everybody. This is
Thanks,
Partner
everyone.
Summit. Facts versus Feelings, signing off. Thank you.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.